Hello everyone, this is Dr. Gowri Ramachandran, Economist and Chartered Wealth Manager. Like everybody is happy and jubilant and stunning as various quarters of the people are all reacting for the data which has got released about what? Our Indian economy's growth, GDP, or what we call it as gross domestic product. So it has gone, expected growth and predicted was 6.5% by various analysts, including IMF, RBI, and various other forecasting agents. Now, actually recorded 7.8%. How does this magic figure has happened? Nothing is magic. Everything has seamlessly contributed to the growth of it. There was a balancing act which has been done. It is just not from one sector or one side. It has come from all the sides. What was budgeted in some quarters have really done, and there are something which has exceeded. Let me just quickly sum up to you just a clipping. It's a bite size, as you all know, so please subscribe to my video, continue to watch to get this bite size, a quick Indian economy's growth path and various other current things happening in India and around. So now to come how this growth has happened, there is a systematic consumption side as well as expenditure side. Things have happened phenomenally. So agriculture has shown 3.7% growth as provided and expected given a support. When in the manufacturing sector, the growth has been a steady, notwithstanding to the IAP numbers, but the profit element in the manufacturing sector was really a good thing which is to happen, which is about 5 quarters higher than the last previous things, and so that has recorded 7.7%, and this is basically for the first quarter. So that time the Trump's tariff and other things were not being affected. People were all looking at this, especially Q1 quarter of India's economic data all over the world very eagerly due to 2-3 reasons. One is the measures taken by Indian government in terms of the RBI's inflation support, as well as once the inflation has come, they've just started projecting it in the growth trajectory. And next is these are all various things which I would say on a broad base has really contributed well. And now when you just really go a little more micro into these things, what has not happened in the last 5 quarters has happened in the overall GDP growth is 7.8%. Now let us segment it. From the investment side, it is 30.4% growth is happening. Retail investors are showing confidence in the SIP system with the mutual funds, and some of them will continue to go with their stream of investments. So that is also continuously increasing the consumption pattern. And there's something which is a stellar performance, which normally will be crying sector, is a construction sector, which has given a star performer this time of 7.6%. And see, this construction is about 2 types. One is a retail housing purchase, gives a sense of revival growth, and government infra spending has really gone up very nicely, and that has paved way for this 1.1% additional growth in this quarter. Then the engine for growth, which is always a boon when there is a slip in some other sector, this is a boon which will just take it up to the growth of the country, which is the service sector. So the service sector has contributed a lot. Trade and transport especially has clocked 8.6%. That's really good. And e-commerce, as usual, because the income tax, there was a lot of benefits given, and there was exemptions withdrawn and other things have happened. So the consumption pattern has happened. Consumption pattern has increased significantly, which is the e-commerce and the younger generations are all going through that. And going forward in the next quarter also, there is another thing, the GST reforms, which will also pave way for the extra demand for the festival seasons, and so the consumption is expected to go not only in urban but also in tier 2 and tier 3 cities. Then financial sector has also grown 9.5%. in line with the deposits and credits. Then when it comes to capex and other expenses, public administration and defense services have just steep increase of 9.8% from 9% in three months. This kind of an increase is really shows the way very resilient about the capex projection in Indian government's path. Then the IT reforms have really helped the individuals, and GST reforms for further growth in the next quarters to come. And then RBI stand towards growth. How will Monetary Policy Committee will look at this number? So naturally they will focus more on the growth, as the inflation is all-time low compared to any other 3-4 quarters. And so there was a gross capital formation which is by 7.5%, private consumption by 7%, and government consumption by 7.4%. All these are all the factors which has really helped the GDP numbers to glorify, glow, and to the global world and to the resilience of all the Asian countries, BRIC countries, and now the SCO is going to Shanghai Cooperative, this one organization, where it is going to take place. There is a lot of decisions are taking place, and so all this exports, when you just say that we cannot underestimate exports also, when China is only 5.2% now growth in overall GDP and USA is 3.3%. In the last 5 quarters, India has been systematically growing in the 6.5% average growth, and now it is stepping one step above 7.8%. And now the project completion is really significant, which I just wanted to mention. There was about more than 2 lakh crores of rupees have been spent on the project completion, which shows that the public infrastructure growth is paving way for the nation's building. And from the expenses side, to look at the GDP's growth, retail consumption, government consumption, and private final consumption are all ranging between 6 to 8%, has just pegged it up to 7.8% growth. So the global demand has not slowed down, whatever be the turmoil happening here and there. So our exports have also continued in the 6.3% bracket. So this is really a clear signal that this 7.8% may not necessarily be carried forward or maintained in the same 7% plus in the next quarters. It might happen because of the GST push and the festival demand coming in October during Diwali and other things. That can happen. But overall, for the whole FY26, all 4 quarters, definitely there is a clear signal that beyond the expected budgeted 6.5% growth, every survey units and every forecasting organization, institutions, Indian as well as global, will definitely revise, and maybe it is from 6.5 to 6.8 or closer to 7 will be the number which I just think about it, keeping the conditions now. Still we have certain things to worry about it with regard to US tariff and how it is going to happen. Rest of the things shows very promising signs, and as we keep marching forward in these kind of a gate, and India can just look forward to grow taller and taller in the global scenario. Thank you very much for watching my channel, and continue to subscribe and forward it, share it with all your friends, and we'll continue to see you with the next good topic. Thank you.